All righty, everybody, we're going to get started here. We only really have one topic today to go through, so it's going to be over the benefits and risks of having your family on payroll. So it's kind of an interesting one. Can get kind of complicated and cause some compliance issues. So we were just kind of trying to shed some light, give you some examples of when you do this, why, benefits and risks, that sort of thing. So, first off, how do you really know if you have family members that should be on payroll? You're going to want to ask yourself a couple questions. Are they a bona fide employee? So, are they really actually an employee who's doing work for the business? They're actually providing something of value that we're compensating them reasonably for. That's the other part of this is you want to make sure that their compensation is not, uh, really what the government is worried about is you're doing something where you're compensating someone to such a degree that it's maybe changing your tax bracket or shifting how you would report your taxes, and so they're wanting to make sure that the person who is being compensated is being compensated properly for the kind of work that they're doing. So something similar to scale is what other folks would make if they were not in your family. They got to be treated the same as the other employees. So they're not going to be getting lax schedules where you're not tracking hours or not documenting their I-9s and W-4s. You want to be treating them just like they're a regular employee. The other thing is you're going to want to make sure that they're age appropriate work. This is a big one. A lot of folks, when they're thinking I'm going to put family members on payroll, they're really thinking their kids a lot of the times. And so, we're trying to make sure that you're putting a kid of a reasonable age on a job that they could complete, something that isn't going to pique the IRS interests of like, hey, you've got a 6-year-old in a restaurant. What's going on here? Anything like that. Even if in your mind, it's family business, they're helping out. That really isn't going to be age appropriate work, and so that's the kind of things that'll trip this up. The compliance gets to be really critical when kids are involved because there are tax benefits. And we all know that the IRS really likes extra scrutiny when they're going to be having tax benefits. Because they just don't, they want to make sure that everything is being allocated properly and everybody is receiving what they should be receiving. So, um, let's hit our next slide here.
Yeah. So when it comes to whether or not you could potentially take advantage of some of the tax benefits of hiring your kids, the first big thing that's going to matter is what type of entity you're using. So most of the time when it is a small family business, it is going to be a sole proprietorship or a partnership. So that on the tax side, that would be a business that either files a Schedule C or a 1065. And when you have that, as long as it is the owner's children working for the business, that's when you would have that payroll tax exemption, workers' comp exemption, and there's some ways you could structure that pay so that it would be a bit more tax advantage than maybe paying yourself that wage. And that can be it can be a nice benefit if you do it like that. But again, the key there is it's got to be 100% owned by the parents. So, it can't be your nephew, it can't be your grandkid. It has to be your child that you have custody over, and there can't be another partner in the business. So, you go into business with someone that's not your spouse, then that's going to, have everything fall apart. You won't be able to take advantage of those exceptions. Now, if it's an S corp or a C corp, so that's an 1120S or an 1120, the exemption kind of goes out the door then. For S corps and C corps, you have to treat those kids just like any other employee. There's really no payroll tax benefit to paying them. There could still be some potential income tax benefit. Really just depends on what your situation is like, but generally it's not going to make sense if you're an S corp or a C corp.
So there are some risks as well as putting the family members on payroll. We've been kind of touching on this, but like I said, it's going to increase that IRS scrutiny. They're really trying to make sure that you're treating this as an employee. They're really trying to make sure that you're not creating a situation where there are folks who have gone through before and they've tried to put infants on a payroll and it happens and
Yeah.
and so they're really paying extra attention to this to make sure that folks are doing it correctly. We really want everyone to be aware, not that everyone is trying to be malicious or anything like that. This can get pretty confusing, and so maybe you're thinking that you're doing it properly, and this extra scrutiny is causing the IRS to really hammer down on you. So we really just want to make sure that that is clear. It can be the compensation. So, like I said earlier, if you're paying someone, let's say they're a bus. You've got a teenage kid and they're a bus boy, and you're paying them, a couple $100,000, and that is going to trip off the IRS, and they're going to say, hey, compensation. This is unreasonable compensation. They're a lot of times the IRS is checking how the employee's classified, what they're doing on a day-to-day basis, their job duties, and so they can check that up against the employee's salary and see, hey, this does not match up with what other busboys are getting paid. This is not something that we can really see as a feasible salary for this type of employee. So that is something that you want to keep in mind, and you're really going to want to be managing this payroll formally. A lot of times, family members start coming to help out, and then you start, I'll pay some money to kind of, make sure we're square, and then it sort of escalates into, well, my kid comes over and helps out, and then I give them money. The IRS doesn't really want to get you into situations like this, because if they do something like a work comp audit, it's going to be, excuse me, it's going to be really, really hard to tell, how many hours the kid worked. A lot of times people pay in cash when they're doing this kind of stuff too. And they're not thinking that that's going to be a problem. They're not really considering that there's not a great record of how this is going to be. And then the IRS turns up and goes, hey, we're doing an audit. How much did you pay this person? And now you've got a mess on your hands because you're going through bank statements. You're trying to figure out what's going on. And the IRS is not going to be happy because you have not been keeping accurate records of what's going on. So just try not to slip into those kind of informal relationships with your family members. Make sure it's nice and clear, like, hey, I'm fine with having you on the payroll, but we have to do it right. Make sure everything's buttoned up so the IRS doesn't come knocking and say, hey, you owe us a whole bunch of money because you have done something wrong. So, benefits of family on your payroll. Yeah, when you're employed in the parent's sole proprietorship or a partnership in which each partner is a parent of the child, payments for the services of a child are subject to income tax withholding regardless of age. So it doesn't matter if the kid is 14 or if they're 21, that income tax is going to be withheld. It's not just a blanket exemption from all payroll tax. Payments for the services of a child under 18 are not subject to that Social Security and Medicare tax, however. And payments for the services of a child under 21 are not subject to FUTA and SUTA tax. However, if the child is 21 or older, then the payments for the services of the child are subject to those FUTA and SUTA taxes. So really don't think of this as a blanket exemption. It's partial exemptions from certain areas, and it depends on the age of the child. There are going to be some times where, the kid may be 19. They are exempt from that FUTA and SUTA tax, but not from the Medicare tax. So before you get all their taxes set up, make sure you're following the correct guidelines based on the age of your kid working for you.
So when you do have those kids on payroll, you've got everything set up correctly. You have that formal setup already. Then you can take advantage potentially of some tax strategies involving hiring those kids. So biggest and most obvious one there is the standard deduction. So everybody, regardless of who they are, where they work, the first $16,000 or so that they're earning is not going to be subject to income tax. So in most situations, if you have a child working for, your kid working for you, they're under 18, under 21, maybe they're still in college, they're probably not going to be earning more than that much. So that makes it a situation where your business can deduct their payroll, but then personally, your child doesn't have to actually pay any income tax on that income. It's effectively tax-free to them. Less potentially payroll taxes depending on which setup we've described fits your situation. What is extremely powerful is that you could then combine that with a Roth IRA contribution. So normally, to do a Roth IRA contribution, you need earned income. So it can't be from investments. Maybe you have investments in your kid's name, or if you just gift your kids money, that's not earned income either. You need earned income to make a Roth IRA contribution. Your kids are working for you, that's earned income. Even though if they're under the standard deduction, they're not actually paying any income tax on that earned income. But they can still make that Roth IRA contribution. Roth IRAs are after tax. They have tax-free growth, but they didn't pay any income tax on it in the first place because they're below the standard deduction. Those funds are now completely tax-free. So that can be a very powerful way to kind of kickstart their savings. As we talked about in other webinars, they can tap into the basis in that Roth whenever they want, those contributions that they initially made. It's only the earnings in there that are kind of trapped until retirement. So it could be a great way to kind of start some early savings for them that they can even still tap into when they're in college or just starting off their career. Another potential strategy there is, quite frankly, when your kids are at the age where they can be working for you, they probably got some expenses that they're going to be incurring. They might have a car, maybe they play club sports, they're in college, they pay tuition. These are probably costs you're going to incur anyway as a parent. And having your kid on payroll now, you have a tool at hand to, instead of paying for those costs out of pocket and with after tax money on your end, which you probably earn more than $16,000 a person, 32 married. So you probably are actually paying income tax on those funds. Instead, now you can kind of defer those or transfer those costs over to your child and say, hey, I'm paying you to work for my business. Maybe you can pay for some of these costs yourself with what I'm paying. And that can be not only a powerful tax tool, but it's probably a good parenting tool as well. You're kind of showing them these are the costs that I'm incurring, but now we're going to pass some of these on to you because you're working for us. One other tool that can be used for these tax strategies is what's known as a family management company. So maybe your family business is an S corp, and so that would kind of put you at a disadvantage for hiring your kids. What you could be able to do is form a new LLC. It's either a sole proprietorship or owned by both parents, and that LLC can instead hire your child. So the S corp would pay the LLC as almost like a contractor. They're contracting out the labor, and that LLC provides the labor in the form of the W-2 child. And so that makes it so that it would then be exempt again from payroll tax requirements. Now, the headache to this, of course, is setting up that LLC and running a completely separate payroll. So if you're already running payroll for your S corp, then you got to do it again just for the family management company. So it could be worth it, saving maybe a few $1,000s in payroll taxes. But it's really just going to depend on your situation and what your administrative burden looks like, if it'll be worth it.
Could I ask an interesting question?
Yeah.
You kind of intrigued me about something. Does your child have to be on a W-2, or could they work as a 1099 contractor?
So they certainly could work as a 1099 contractor, and you would still get the same benefit on the income tax side, that standard deduction, the Roth IRA contributions. The downside to that is, regardless of the setup for your business, they'd be a 1099 contractor and all of their pay would be subject to self-employment tax. Generally, that's not seen as a positive in a situation like this. For one, your business can't deduct the employer's portion of the payroll taxes anymore. And two, it's generally just going to be a higher tax burden than overall compared to keeping them on a W-2. Now, the administrative burden might be less, but if you're already running payroll anyway, it really isn't that much harder to just add your kid on there. And if you qualify for the right exemption, plugging that into your payroll system.
Sounds good. Sounds good.
All right.
All right. I do believe that is the end of our presentation here this week.
Mm-hmm.
However, as you can tell from this topic, this can be kind of a case-by-case basis thing.
Mm-hmm.
So if you are ever confused, concerned, need to consult someone, you can always give us a call and we can help you out with this kind of stuff, advise you on, hey, yeah, we do think that's reasonable compensation. Hey, we don't, et cetera, et cetera. So yeah, please feel free to reach out to us if you have any questions about this. We'd be happy to help you out, and we will be having another webinar next week at 2 p.m. Central, as always. So thanks for watching, folks, and I hope to see you next time.